Video 13, Moving Averages. The majority of you are probably aware of how averages are calculated. There are a few ways to calculate averages. The two most common are probably mean and mode. A mean moving average is taking a series of numbers, adding the values of those numbers together, then dividing by the number of values. So in this formula here we add each of these numbers and then divide by the number of values, which gives us 8.89. A mode average is taking the center number, which is 8. There are 7 numbers. Number 4 is the center number, 3 numbers either side. The center value is 8, so the average is 8. So what is a moving average? A moving average is calculated the same way as a mean average is calculated, but instead of taking the whole series of numbers, we take a selection of these numbers. So if we had a moving average at the period of 5, or a 5 moving average, we would take the last 5 values, add them together and divide by 5. So 14, 12, 10, 8, 7, divide by 5 gives us 10.2. Moving average of 6, we would take the last 6 values, 1, 2, 3, 4, 5, 6, add them together and divide by 6. If we had a moving average of 3, 14, 12, 10, divide by 3 gives us 12. So how are moving averages used in financial trading and technical analysis? Well, first of all, moving averages look something like this illustration that I have on the screen. They're generally calculated by the closing price of candles. So if we had a moving average of 10, we would take the last 10 candles, their closing price, and the average would be calculated from those values. With each closing of a candle, obviously that moving average shifts up a candle, and all the calculations of moving averages are plotted on a chart and then joined, and that's how we have this curve-like line created on our charts. Moving averages can be used in the following ways. They can act as dynamic support and resistance. They can show longer term bullish or bearish bias and a change of market direction. And we'll go to a price chart now and I'll show you how a moving average is used in technical analysis. This is a 4-hour chart of the Euro US dollar. I have a moving average on the price chart. The moving average is set at the period of 100. As mentioned, we can use a moving average in 3 ways. 1, to act as dynamic support and resistance. 2, to show longer term bearish or bullish bias. And then thirdly, a moving average can signal a change of price direction by using a moving average crossover, and I'll demonstrate these 3 ways in this video on these price charts. So first of all, dynamic support and resistance. I have taught dynamic support and resistance in a previous video, but briefly let me just give an overview of dynamic support and resistance. So we have this moving average set at 100, price is clearly uptrending, it's going in an upwards direction, and each time this moving average is hit, price bounces and shoots on the upside. So we have a bounce here, a second bounce and a third bounce. Each time price came down to the moving average, we could have looked for signals to go long and profited as price went on the upside. If we continue going forward on this chart, the dynamic support is finally broken here. The moving average can now act as dynamic resistance, which it does. Price comes up to the moving average and is rejected. And this is current price now. So this is very recent price action that I have on the screen. To demonstrate how a moving average can be used to show the bearish or bullish bias, let's go to a 1 hour chart. We'll stick with the Euro US dollar and go to a 1 hour chart. Okay. So there are a couple of ways a moving average can show us the longer term bias. First of all, the direction of the moving average can show us the longer term bearish or bullish bias. So if the moving average is in a downwards direction, which it is here, this can mean that price is downtrending or moving in a steady downwards direction. And you'll notice that it is. Price starts to move on the downside here, and price continues to move down to current price. If we go back on this chart, you'll notice that the moving average is in an upwards direction, and so is price. It's moving upwards, it's uptrending. Another way this moving average can be used to determine longer term bearish and bullish bias is not just the direction of this moving average, but if price is below the moving average, that can signal bearish momentum, and if price is above the moving average, that can signal bullish momentum. Now the third way a moving average can be used is to signal a change of price direction. Let's go to a different chart to demonstrate this. Let's go to a 15-minute chart, and let's bring up a second moving average at the period of 200, and let's make it red. If our red moving average or slower moving average is above the green or faster moving average, this is a signal that price could downtrend or is downtrending. If the green moving average is above the red, that can act as a signal that there is bullish momentum, that price is uptrending. Now when these moving averages cross, that can act as a signal of price direction changing. So we have price moving on the upside, the green moving average is above the red. We have this crossover right here, and soon after price is moving on the downside. If we go further back, once again we have a crossover here. The green was above the red, we cross over, the red is now above the green. This can signal price is going to downtrend, and it does. As with any price indicator, they're not 100% accurate. There are going to be times when moving averages cross and price doesn't move the way that the moving averages signal. So indicators are to be used as a confirmation and as part of our price action analysis. Let's go to a different price chart. The pound against the US dollar. And let's go back to a 4-hour chart. You'll notice there has just been a moving average cross on this chart. Our green moving average has been above our red, and price has been moving on the upside very steadily. We've had this moving average crossover, signaling that price could now downtrend. We've also broken this dynamic support. The moving average acted as support here and here. It was broken, price has come back up, and this moving average is now resistance. We have a pin bar, price has been rejected. So right before our eyes on a 4-hour chart, the pound against the dollar, we are getting signals of a downtrend. In summary, moving averages are a common price overlay, if not the most popular price overlay, and they can act as dynamic support and resistance, show longer term bias, that's bearish or bullish bias, and they can signal change of market direction, usually by using a moving average crossover. Our next video is chart setups part 1, and in that video I will demonstrate some trading setups that you can take to profit from the forex markets.